Hello, everyone, and welcome back. My name is Greg Furman, and this is the Vantage Point AI Market Outlook for the week of September the 5th, 2022. Now, to get started this week, we will begin where we always do with the very important U.S. dollar index. More of a brief presentation this week. We're in holiday thin, coming out of summer trade, holiday thin markets. So we should expect some volatility in this coming week. We've got the ECB decision, I believe the ISM number out of the US, but nothing huge. But I think that the dollar right now is going to stall out potentially a little bit here. We're still struggling with this 109.29 level, unable to break through it. We've had a slightly higher verified zone at 109.47, but as you can see, not a lot of buyers up here at the current time. We've got our MA diff crossing to the downside, but we are holding above the monthly opening price and our key T-cross long, 108.19. I could anticipate some minor pullback to this particular level. Now, again, this has nothing to do with Fibonacci, Gann theories, or anything like that. There's simply a predicted moving average, the monthly opening price, and a normal retracement or lack of buyers is what we're going to see up here. So once again, when we look at this level up here, we don't want to get our trading too complicated here. We've got the verified zones, and the theory is the dollar is, is still along while above the T-cross long, but it's lacking momentum at the current time. That's perfectly normal at this time of year. But the seasonality component of this is that the dollar usually does well. Basically, I would argue late August through to about late October, mid-November, the dollar still goes up and down, but it is a stronger buying month. So we would look for a retracement back down to this 108.19 level to see if that holds, and then we would look for to branch out from there to look for at the different forex pairs and even additional potential shorts on equities, some of your different commodities. So when we look at the main commodity that inversely correlates to gold, we can see that gold's still under pressure, but it appears to be we have some buyers coming in. We have a strong, very strong verified support low at 1681. But again, September from a seasonal standpoint is not a great month for gold here. The dollar, it's still longs favor the dollar versus gold, but a retracement is perfectly normal. We would look for a retracement to the 1738.20 level and then assess at that point. The indicators here are pointing that this is a corrective move higher, not a new trend, until we close above the T-cross long and stay above that for a minimum of 2 days in a row. But again, we would still have to deal with that verified high of 1764. Now, when we look at light sweet crude oil going into next week, once again, oil is struggling. We've had a bit of a rebound here, but then down again. So when we look at what's happening in Europe, with Europe, in my opinion, making the mistake of shutting down those nuclear plants and coal plants, my understanding is they're reopening some of them now because they have to for energy purposes. But so when we look at that right now, oil is still likely to remain firm, but I would keep a very close eye on down on these verified zone lows at 85.37. The indicators are predominantly still bearish for the time being. But when I look at this, what I find unusual here, I'll do a quick, did have a request if I could look at natural gas. We can see here that on Friday that natural gas is getting into a lot of resistance up here. We have closed below the T-cross long at 8.91. The question is, can we stay below that? The indicators here are suggesting that natural gas is going to move lower, but we need to stay below or continue to close below 891 in order to validate that. Now, there does appear to be some momentum building, but once again, I don't anticipate that natural gas is going to move a lot to the downside. This still looks to be, in my opinion, corrective in nature, but we'll assess it each week because, again, this is a weekly outlook, not a daily outlook. Now, when I look at the S&P 500 for next week, once again, a pretty strong setup here. We close under that T-cross long. We retrace back to it. There's our 2-day rule. Tries to fake us out here and go higher, and then down we go. So right now, when we look at the S&P 500, there is some minor bias for a continued corrective move higher. But that T-cross long now is at 40.72. Again, unless we can close above this level and stay above that, then the primary bias remains lower. The other seasonal pattern here is that in most years, when you're in an election year, predominantly stocks don't do well until you get close to that election period, which would be the U.S. primaries. So once again, I believe that the closer we get to the November, that could be beneficial to the S&P. But right now, we want to continue to focus on 40.72 in the primary indicators. This is telling me that we could be retracing higher, but a new trend has not been confirmed. Now, Bitcoin again is only in my respectful opinion, the Bitcoin is uh, I would consider it to be bordering on a leading indicator for the Nasdaq, the S&P 500. So, as long as Bitcoin remains holding below that, that 19,005 mark, but we do have additional support, I believe, yes, down to 17.6. So, as long as we stay above this, then I don't think the equities are a wash, and I don't think Bitcoin's a wash. I think it's a buying opportunity. We know the known seasonality for Bitcoin is the latter part of September. Strong buying comes into this. That's what we see from a seasonal standpoint. So this year, well, maybe a little bit different. We'll assess that when the time comes. But for now, we don't have a lot of buyers, but we don't have any sellers either here, guys. So continue to watch that 19,500 mark, but the indicators are still predominantly bearish. Now, as we go into some of our main Forex pairs, again, a busy week I think it's going to be for the euro, and I believe that this is why the dollar will soften a little bit pre-ECB, because you'll have that speculation, right? That they're going to hike or they're going to be more aggressive in their position on on the rate hike. So we'll see where that goes. But right now, this previous week, you can see I did using the T-cross long. Again, this is the second week in a row. I've just used the T-cross long because it's that time of year, guys, where there's going to be a trending market, and we just want to try and make sure we're on the right side of it when that actually happens, right? So we're retracing back up to the T-cross long. We stop dead on that and it falls. So we use that as a pivot point in our trading. The T-cross long just above parity, 1.0044. I could easily see that being challenged going in pre-Thursday trade. We're still in a holiday short week next week, with the Labor Day on Monday. Plus, you have people, the big banks. They'll take an extra 3 or 4 days. They'll come back a week Monday, and they'll just let this week play out. So a choppy week is likely ahead. But I could see the euro making some ground. There's a high correlation between the euro and gold. So if gold starts rising, we should see the euro rise also. But again, I think that that's only temporary in the month of September. And then ultimately that seasonal play, not to mention a hawkish Fed, will continue to push the dollar higher, at least temporarily for the month of September. So keep an eye on this particular level. If we break and we close above that, that could open up the door for another retracement back up above parity, maybe towards the 102 level. But again, my optimism on that still remains heavily guarded. The U.S. Swiss franc next week, if the dollar continues to rally, then the Swiss franc will also, but I would look for some kind of retracement here first. Now, I don't think we're going to retrace all the way down to 96.71, but I think that we will retrace. We've got a bit of a gap here between the T-cross long at 96.71. The predicted low is 97.51, so there are 54, excuse me. So there's a significant gap that needs to be maybe filled a little bit before we get into another rally on this. We also have a strong verified resistance high at 98.86, so that is the immediate resistance you want to watch next week. I would be cautious buying around that area because, again, this identifies a failure point in the market, an indisputable failure point. So in order for the US Swiss franc to rise, we need the dollar index also moving up. Now, with the British pound going into next week's trading, looks like we've got a little stalling out a little bit here down around 114.95. That's a much bigger area of resistance than what you would think. And when we look at this over the last year, you can see from a year ago that the British pound stabilized in September, but it still didn't do well. So, when we look at this right now, you can see that this other additional verified zone that's running back here, we would have to go back several years to find that verified zone that's, I think, is down around the 113 area. So, yeah, there it is right there. We're actually even, no, that's, let me just pull that up here so I can get the low point there, 114.11. So I believe we'll take another run at that area, and then we would be looking for a potential rebound here. So once again, the indicators are running pretty much flat on this thing as it continues to fall, but 114.11, between 114.11 and the other verified zone around 114.80, these are the levels you want to keep your eye on because the indicators are again starting to flatten out. They're starting potentially to turn, and we'll see where we go from here. But there is that possibility that the pound will gain some strength in the month of September. Now, when we look at the dollar yen, in my trading career, I have not seen the dollar yen at these kind of levels in I can't even remember. I think 135 is the most I've seen. We've come up in July, we've hit the 137 mark, and now we're pushing above that also. But this pair is clearly overextended, but that doesn't mean it's going to go lower here. But I believe that there will take some sort of risk off catalyst to really send this thing lower. Plus, I would like to see gold going higher, which would favor the yen. And at this time, that's not happening. So again, we'll continue to watch the monthly opening price at 138.94. I would bring that into your trading here because ultimately, I think we've got a significant gap between where the market is right now, where we've closed at 140, the T-cross long at 137.28. At the beginning of the month, that would tell me we're probably going to get into some type of retracement. Then we can reassess that once we've had that retracement. But buying at these levels is at very, very lofty levels. The indicators are basically, again, overextended. That doesn't mean it can't go higher, but again, I would be very, very cautious with longs up at these very, very lofty levels. Now, with the U.S. Canadian pair, once again, we approach that verified resistance high at 132.23 on Thursday, and then you can see it just backed right away from it. So again, the verified resistance tools, zero lag. There is something that's indisputable in the market. The market has failed on July the 14th at this particular level. It creates a zone up here and says, okay, this is a very significant resistance level and it needs to clear it. And maybe not a great idea. A lot of retail traders will tend to follow the primary trend and they will buy high and they will sell low. That can be dangerous until I believe we're going to get a retracement here, probably down to the T-cross long around 129.98. We have the Bank of Canada this week, guys, and the word on the street here that I hear from Canada is this is it. It's going to be a big one, and then they're going to maybe pause. That's again just the word on the street here. That's the only thing I can tell you, and it's the words that I get are usually not far off. So this is what I'm hearing they're going to do is really go for one more big rate hike, and then they're going to say, okay, this is probably it for a while, and now we're going to see what happens. I can't say for sure that that's what they're going to do, but if that's the case, the initial move will be down on the U.S. Canadian pair. Be very cautious with this on Wednesday at 10 a.m. when the Bank of Canada makes that statement, because we're all expecting a big hike here, but we're also suspecting that this could be the end of it for several months or maybe till next year. We don't know. So again, watch that level, and I would expect into that announcement on Wednesday that this pair falls towards the 129.98 level. Now, when we look at the Aussie US and the New Zealand US, very, very similar trades, almost identical. They're both bearish, but they're both an S&P 500 trade. So if the dollar backs off a little bit, we get a bit of an equity rally, then you'll see the Aussie US go higher, New Zealand US go higher, US CAD come lower. That's the basis of intermarket technical analysis, that those other markets will affect what happens over here, regardless of interest rate hikes, economic data, all these things. The intermarket correlations very often trump those. So if stocks turn around, then the Aussie could turn around. I do anticipate dollar strength this month. We just have to get through the Fed speech this week, get through the Bank of Canada, and see where the market is going to shake out. But again, the dollar will go up and down during the month of September, but there's a heavy up bias to it in the month of September also. Strong dollar, almost I would argue September has usually been almost as good as your February March seasonal patterns where real money is bringing dollars back into the US. They're buying dollars. It's a very, very strong period. But September and part of October are also usually quite good. And even when Bitcoin went up last year, the dollar and Bitcoin were going up and down at the same time. So again, we'll be watching all of these things. But right now, our upside target is 68.97, a retracement for that to that level, but we need to get above it and we need to close above it. The indicators, the reverse check mark on the predicted RSI, the neural index strength is rising. The slope of it is starting to turn back up, but this again is a retracement, not a new trend until we clear that T-cross long. The same thing is applicable to New Zealand here, guys, but with this one, we're sitting on a verified support low, 60.50. So at that 60.50 level, we've already hit it twice, excuse me, in the last several days. Then Friday, we took a pretty strong bounce off of that. So that tells me we're likely moving towards a retracement move to 61.84. If we can clear that, close above it 2 days in a row, and we can clear this additional verified resistance high at 62.51, then we have a shot of extending higher, but that is going to take an equity rally, guys. Even if the dollar is strong across the board, it could still lose the ground against the New Zealand, and the CAD if the Aussie and the S&P, or excuse me, if the dollar and the S&P 500 both start moving up together. So with that said, this is the Vantage Point AI Market Outlook for the week of September the 5th, 2020.